Good afternoon, Miguel Osio with the Winston Minute. A report at the market's close, and closing today's rally, we saw actually a 25% spike in U.S. equities from last December. So one of the most violent swings in that 7-month period that's been seen in many years. Really interesting and sort of wrapped up today as we start to get to the middle of a strong reporting week, and many reporting surprises, most of them in the positive end, especially coming from tech. Today we saw the Nasdaq actually take a 1.3% spike, following some really positive numbers from some of the heavy hitters in tech, and particularly Twitter and Snapchat presenting a big surprise. Companies that have really had tricky moments following reporting and having trouble with cash burn and profitability. But big surprise, especially at Snapchat. I think it closed like 10% up. Not something that we look at or own, but interesting nonetheless. And if you remember, about a year ago, they quietly announced a deal with Amazon to use their sort of facial recognition and augmented reality technology together with Amazon's transactional and sort of marketplace tech to use it to make purchases and whatnot in reality. So use Snapchat technology, identify an object and make a purchase, something that I thought was really impressive at the time. Now, during that 7-month period, we also saw an aggressive change on sort of the Federal Reserve stance, right? We saw them go from a very bullish, very confident on inflation incoming to a more dovish, halting the rate raises that they promised, and even some murmuring of perhaps reverting in the other direction, and copying Europe a bit, as we saw Mario Draghi sort of head in that direction and try to use a lot more policy to accommodate the economy. So it's been a really interesting 7 months. Figured I'd share that. Interesting enough as well, we also saw about an interesting decrease in volume that we've constantly been reminding you about. But along with that, there was a survey of very, very low conviction among investors. It's conviction about what direction they have for the next 12 months, how they feel about the market over the next 12 months. And Bloomberg did a survey, and conviction was surprisingly low. A lot of uncertainty, and that makes sense, seeing as volume has been a tricky issue, and liquidity as well during these big sell-offs. Certain things have been harder to sell than others that were previously considered fairly easy to sell. So that sort of a thing. But folks aren't alarmed still, and especially from the same Bloomberg report, they were talking about valuations, and a lot of people off the cuff, myself included, feel just sort of from observing, sniffing the air, I'd say they think that valuations are really overblown, right? You get these sort of lower quality IPOs, or at least at surface level, seemingly lower quality, something like Pinterest that has a very sort of narrow market coverage, are still within pretty acceptable value ranges. If you look at it from a year ago, compare it to other IPOs, still within a pretty reasonable range compared to last year. And even in a broader context of 10 years, the values are still relatively fair. They are slightly inflated, the earnings to price per share multiple, or sorry, earnings to book multiple, but they're below 15. They're nowhere near like the .com bubble numbers. So it's definitely been blown out a bit, but nowhere to the point where it's really alarming any economists. So really interesting to look at that. And following today's rally, couldn't be a better time to get some fresh information on how the market's turned around since last year. Stay tuned for the rest of the week. We have the Bank of Japan, Bank of Canada, Bank of Indonesia, Sweden, Russia, and Indonesia setting new monetary policy. So we'll watch out for that, see if there are any surprises, any shocks in FX or fixed income sovereigns of those countries, and so forth. That's all I have. Take care. We'll catch up tomorrow. Have a good evening.